There's a new tax deduction, part of the One Big Beautiful Bill Act just signed into law by President Donald Trump. It might sound simple, but it's quietly reshaping how millions of Americans give and what they get back. You probably haven't seen a single detail, but I've gone through the new rules for you. And here, I'm breaking down exactly what just changed, how much you can deduct, who qualifies, the new threshold that could make or break your next refund, and how it could put extra money in your wallet. And hey, before we go further, let me ask, have you ever donated to a cause that meant a lot to you, even when money was tight? Leave a quick comment and let me know. I think a lot of people will relate. And if you're finding this helpful, consider subscribing so you don't miss out on future updates that could actually save you money. Now, here's the first big change. For the first time in years, taxpayers who don't itemize will still get to deduct charitable donations. This is huge. Since 2017, most people haven't been able to write off their giving unless they had enough expenses to itemize. And let's be honest, that's not most of us. But now, starting in 2026, you'll be allowed to deduct up to $1,000 in cash donations if you're single, or up to $2,000 if you're married and filing jointly. And you don't need to itemize to do it. Now, there's a catch. This only applies to direct cash gifts to qualified 501c3 charities. So things like GoFundMes or donations to your buddy's startup, unfortunately, don't count. And neither do gifts to donor-advised funds or private foundations. It has to be a straightforward donation to a certified nonprofit. Still, it's a step toward recognizing small donors in the tax system again. And if you're used to giving $10, $20, or even $50 to a local cause or church every month, this new rule is meant for you. But what's also interesting is that this change kind of brings back something we had briefly during the pandemic. Remember the temporary rule in 2020 and 2021 that let non-itemizers deduct $300 or $600? That expired, but this is like a larger version of it, and now it's here to stay. At least that's the idea. Now, on the flip side of all this, the new law also makes it harder for wealthier people and corporations to get big tax benefits from their giving. And that's where things get a little more complicated. So starting the same year, 2026, there's going to be a floor for charitable deductions if you do itemize. You'll only be able to deduct the portion of your donations that exceeds 0.5% of your adjusted gross income. For example, if you make $100,000 a year, only donations above $500 count for a tax break. Below that, doesn't count. That's something most people aren't used to thinking about. And if you're a business owner or corporation, same idea. Your donations only count if they go over 1% of your taxable income. So it's not just about giving, it's about how much you give. And if that threshold isn't met, there's no deduction at all. So that's where we start to see a shift, not just in who gets a benefit, but in who loses one. High-income earners, big donors, and corporate givers are being asked to carry more of the burden. On top of a new floor, there's also a new cap on the value of the deduction itself. If you're in the highest tax bracket, you won't get the full 37% value back. Instead, you're capped at 35%. So for a $10,000 donation, instead of saving $3,700 in taxes, you save $3,500. Now, for some folks, that difference might not matter. But for others, especially those making large strategic donations, it might change how much they give or who they give to. And guess what? Nonprofits are already bracing for that. You see, many charities rely on those big gifts. Think museums, universities, hospitals, and organizations doing nationwide outreach. And now, they're facing a future where those donors might hold back, or at least hesitate. I heard from one nonprofit leader who said she's already spending more time fundraising now than ever before. In fact, she said all day, every day, is just about finding new support because government aid is shrinking and corporate donations have started pulling away. And if you're running a nonprofit that supports communities often left out of mainstream giving, like specialized youth or grassroots mental health services, these kinds of rule changes hit even harder. But from the administration's side, there's a different story. Supporters of the law say this is about democratizing charitable giving. In other words, making sure regular folks, not just the wealthy, get a reward for their generosity. And honestly, there's something to that. The majority of Americans now take the standard deduction. They give smaller amounts more consistently, and they often volunteer their time too. This new law, in a way, acknowledges that contribution. And here's another curveball, because the law also raised the cap on the SALT deduction, which is that limit on how much state and local taxes you can write off. That cap went from $10,000 to $40,000, which could push more people into itemizing again. So for some middle and upper middle income folks, itemizing might start making sense again, which could change how they approach their giving. So yeah, if you're somewhere in that middle income range, there's a little more strategy involved now. You want to look at your overall deductions, see how close you are to the threshold, and decide whether itemizing gets you a better deal or whether to just stick with the standard deduction and claim the $1,000 or $2,000 charitable deduction on top. And what I'll show you next might surprise you, because while this sounds like a win for the average donor, it's not all smooth sailing. Some tax experts are pointing out that these new non-itemizer deductions, while generous in theory, may mostly reward people who are going to donate anyway. It's what one economist called built-in waste. Basically, you're giving a tax break for something people were already doing. So that raises the question, will this law actually increase charitable giving? Or will it just shift who gets rewarded? Well, it's too early to tell. But we do know from past changes, like the 2017 tax law, that when you take away incentives, giving tends to drop. In fact, charitable contributions fell by around $20 billion after the old itemized deductions disappeared for most people. So the concern now is whether the high dollar losses from wealthy donors will cancel out the new gains from everyday givers. And that's why some nonprofit leaders are worried. They're not just watching how much money comes in, but where it's coming from. Big donors give big chunks that fund entire programs. If those go away, it's not always easy to fill that gap with small $50 checks, even if more people are giving. Now, let's explore further. If you're thinking about how this affects you, here's what I'd suggest. First, take stock of what you typically donate each year. If you're giving smaller amounts, maybe to your church, a food pantry, or an animal shelter, you'll likely benefit from the new non-itemizer deduction. It's simple, straightforward, and you don't need to worry about keeping track of 100 other expenses. But if you're someone who gives larger amounts, or you already itemize, you'll need to pay closer attention. That new 0.5% floor could limit what counts. And if you're near the top tax bracket, the new cap might reduce your benefit just enough to shift the equation. Also, keep in mind the receipts. Even if you're only deducting $200 or $500, you still need proper documentation. So make sure that charity sends a formal acknowledgement. And next, consider timing. Because these changes take effect starting in 2026, you still have time to plan your 2025 giving under the current rules. That might mean front-loading donations this year if you're close to a threshold or planning for how you want to organize your giving next year, especially if you're weighing whether to itemize. So what does all this mean for the future? Well, it's a shift, a big one. It's about encouraging broader participation in charitable giving, but it's also about asking wealthier givers to absorb more of the cost. Whether that's fair or not, that's a bigger conversation. For now, though, I'd love to hear your thoughts. Do you think giving should be rewarded no matter the amount? Or should the biggest tax breaks go to the biggest givers? Let me know in the comments. I really do read through what you all say, and it helps shape what we talk about next. And if this helped clarify some things for you, maybe help you feel more prepared, feel free to hit that subscribe button. We've got more updates coming soon, and I always aim to keep things clear, calm, and useful. Thanks for hanging out with me today.